What if I told you that diversification, the golden rule of investing you've heard 1,000 times, isn't enough to protect your portfolio from real disasters? Imagine this. In 2008, the stock market crashed 50%, and even diversified investors lost big. Fast forward to 2022, inflation and volatility wiped out trillions. But here's the kicker. A study by Vanguard shows that 90% of long-term returns come from smart strategies beyond just spreading your bets. If you're a beginner investor tired of market whiplash, or you're building wealth through ETFs and compounding, stick around. Today, we're diving into strategies for true portfolio resilience. By the end, you'll have a bulletproof plan to grow your money no matter what the market throws at you. Let's get into it. Hey everyone. On this channel, we talk about long-term investing strategies that anyone can use, especially beginners. We love ETFs for their low fees and compounding magic, but today we're going beyond the basics. Diversification means not putting all your eggs in one basket, like mixing stocks, bonds, and maybe some real estate. It's great, but in turbulent times, think recessions, inflation spikes, or black swan events, it can still crack. True resilience? That's about building a fortress, not just a basket. We'll cover 4 key strategies: smart asset allocation, risk-proofing tactics, behavioral hacks, and compounding boosters. These are beginner-friendly, ETF-focused, and designed for the long haul. Ready? Let's build that unbreakable portfolio. First up, go beyond basic diversification with strategic asset allocation. This isn't just splitting between stocks and bonds, it's tailoring to your life stage and goals. For beginners, start with a 60-40 split. 60% in stock ETFs like VOO tracking the S&P 500 for growth, and 40% in bond ETFs like BND for stability. But here's the pro tip. Add alternatives for true resilience. Think 10 to 15% in real estate ETFs like VNQ, which hedge against inflation, or gold ETFs like GLD, for when stocks tank. Why does this work? In 2022, while stocks dropped 20%, bonds and real estate held steady for many. And for long-term compounding, reinvest dividends from these ETFs. A $10,000 investment in VOO at 7% annual return compounds to over $76,000 in 30 years. But adjust as you age. Younger folks, go aggressive with 80% stocks. Near retirement, dial it back. Use free tools like Vanguard's Allocator quiz to personalize. Remember, allocation isn't set it and forget it. Rebalance yearly to lock in gains. Sell high flyers and buy underperformers. This keeps your portfolio resilient, turning volatility into opportunity. Strategy 2, risk-proofing to weather storms. Diversification spreads risk, but resilience demands active defenses. Start with dollar cost averaging. Invest a fixed amount regularly, like $500 monthly, into an ETF portfolio. In down markets, you buy more shares cheap. In ups, less. A Fidelity study shows this beats lump sum investing 68% of the time over 10 years. Next, build an emergency fund. 6 to 12 months of expenses in a high-yield savings account or money market ETF like VMFXX. This prevents panic selling during crashes, preserving your compounding engine. And don't forget hedging. For advanced beginners, add options or inverse ETFs like SH, which rises when markets fall. But keep it to 5% of your portfolio to avoid overcomplicating. Real talk, in 2020's COVID crash, resilient investors who hedged recovered 30% faster. Tie this to compounding. Avoiding a 20% loss means your money grows from a higher base. Beginners, start simple. Use robo-advisors like Betterment for auto-rebalancing and tax loss harvesting, which sells losers to offset gains, boosting after-tax returns by 1 to 2% annually. That's huge for long-term wealth. Third, master behavioral hacks, because the biggest threat to resilience is you. Markets recover, but panic selling locks in losses. Strategy? Set rules. Review your portfolio quarterly, not daily, to avoid emotional trades. Use apps like Acorns for micro-investing. It rounds up purchases and invests spare change into ETFs, building habits effortlessly. And fourth, supercharge compounding for ultimate resilience. Einstein called it the 8th wonder. Invest early, stay consistent. A 25-year-old putting $200 monthly into a total market ETF like VTI at 8% return hits $500,000 by 65. To resilientify it, focus on low-fee ETFs under 0.1% expense ratio and dividend reinvestment. During downturns, double down. Buy more shares on sale. This turns resilience into rocket fuel for wealth. So, to wrap up, diversification is step 1, but true portfolio resilience comes from smart allocation, risk-proofing, behavioral discipline, and compounding mastery, all beginner-friendly with ETFs at the core. Implement these, and you'll sleep better knowing your investments can handle anything. Your future self will thank you. If this helped, smash that like button, subscribe for more long-term investing tips, and comment below. What's your biggest portfolio fear? Share this video with a friend starting their investing journey. Let's build resilient wealth together. Thanks for watching. See you next time.